Let's look at the last part of the financial function. Budgeting is a very important part. Budgeting is the financial tool that estimates expected cash receipts against estimated cash payments, so as to determine whether the business is expected to make a surplus or a deficit. The financial manager makes these estimates based on historical data, inflationary projections, and predictions of the economy in general. It is also common to consider the nature of your business and its strengths in the current economic climate when budgeting. Once the budget is completed, the financial manager will then compare the budgeted figures to the actual figures and make recommendations on how to effectively deal with positive or negative differences. These differences are called variances, and their recommendations are called strategies. Look at the expenditure of our government. These are suggestions of where money or estimates of where money will be spent in the different sectors. Financial statements. You will remember this from grade 9 EMS, where you've covered a bit. The first we look at is the income statement, also called the statement of comprehensive income. An income statement for a retailer will show the sales and the cost of sales figures and will be used to calculate the net profit of the business. It reflects transactions for a period of time, for example, a summary of what happened during the financial year. The balance sheet or the statement of financial position of the business happens on a specific date, for example, the last day of the financial year. The balance sheet shows how money was raised, owned or borrowed, and how it was applied, spent on assets. Now, what is the difference between cash and profit? Cash relates to the amount deposited and withdrawn from the current bank account of the business. Cash is generated through the sale of inventory, increase in capital, and borrowed funds. Cash is utilized through the purchase of fixed assets. Profit, on the other hand, is the financial return or the reward that entrepreneurs aim to achieve to reflect the risk that they take. Profit is a surplus remaining after total costs or expenditure are deducted from total revenue, the income, and the basis on which tax is calculated and dividends is paid. It is the best known measure of success in an enterprise. The profit is shown in the income statement. Let's test your knowledge. Right, please read through your notes and highlight your keywords. Make sure your mind map is now complete. You have summarized every section, and then study your work. The next lessons, we are going to practice some exam questions and then do a quiz to see how much you understand.